Hey everyone, welcome back to Corporate Decoder. Today we're diving into a report from Dermata Therapeutics, and let me tell you, it's a bit of a roller coaster. They've been riding the struggle bus, but maybe, just maybe, they're starting to see a glimmer of hope, or is it just the headlights of an oncoming truck? Let's find out. The report basically says we were in trouble, but we're trying to fix it, and now we might be in trouble again. We are going to focus on how the company is not satisfying some rules to be listed in the stock market. If you appreciate getting straight insights from corporate documents, make sure you're subscribed. We also have a Discord community linked in the description below where you can share your thoughts on this company. Scrolling to Consultator to Dermata Therapeutics is filing what's called an 8K form. This is basically a current report companies file to announce major events that could be important to investors. Think of it as their way of saying, hey, something big happened, you should know about it. The report is dated May 16, 2025, which means the events happened around that time. Scroll form set scroll tid. So, what's the big deal? Well, it involves Dermata's stock listing on the Nasdaq capital market. Being listed on an exchange like Nasdaq is a big deal for a company. It means more visibility, more investors, and generally more credibility. But to stay listed, companies have to follow certain rules. If they don't, they can get kicked off, which is bad news. Scroll item DR3 3.1. Notice of delisting or failure to satisfy a continued listing rule or standard. Transfer of lick scroll TIG. This part of the report explains that Dermata received a warning from Nasdaq because they weren't meeting the requirements to stay listed. There were two main issues. Scroll stockholders' liquidity. Square's issue was about something called stockholders' equity. This is basically the value of the company's assets minus its liabilities, or what the shareholders own in the company. Nasdaq has a minimum requirement for this, and Dermata fell below it. In other words, the company's financial health wasn't looking too good. Fortunately, in May 2025, the company received a letter that they regained compliance with the stockholders' equity requirement. Scroll minimum cow bid price scroll, but here's where things get tricky. The second issue involves the minimum bid price of Dermata's stock. This means the price per share has to stay above a certain level. In this case, one bot, in this case, $1 GEOs. If the stock price falls below that for too long, Nasdaq can issue a warning. And that's exactly what happened. Dermata received a notice from Nasdaq saying they weren't meeting the minimum bid price requirement. What's worse, because Dermata did a reverse stock split, which is when a company reduces the number of its shares to increase the price of each remaining share. Nasdaq basically said they are at risk of being removed from the Nasdaq capital market. Scroll, however, there can be no assurance that the company's compliance plan will be accept to Scroll put Dermata plans to appeal this decision and request a hearing before the Nasdaq hearings panel. This buys them some time, but there's no guarantee they'll win the appeal. If they lose, their stock could be delisted from Nasdaq. This means it would be harder for investors to buy and sell their shares, which could further drive down the price. Scroll forward-looking call statement scrolls now. The report includes a section on forward-looking statements. This is basically a disclaimer saying that the company is making predictions about the future, but those predictions might not come true. There are risks and uncertainties involved, and the company's actual results could be different from what they expect. Scroll has discussions of potential risks, uncertainties, and other important factors in any subsequent company filings with the Securities and Exchange Commission. They point you to their annual report on Form 10K, where they detail these risks and uncertainties. It's a good idea to check those out if you're considering investing in a company. The report is signed by Gerald T. Proyle, the Chief Executive Officer of Dermata Therapeutics, which means he is responsible for making sure that the details in the report are true. Now, what does all this mean? Well, it paints a picture of a company facing some serious challenges. They were able to fix their stockholders' equity problem, but they might fail to keep their stock price above the minimum of $1. Here's my take. Dermata is in a tough spot. Their financial health is questionable, and now they're fighting to stay listed on the Nasdaq. While they've managed to address the stockholders' equity issue, the minimum bid price requirement remains a significant hurdle. The risk of delisting is real, and that could have serious consequences for the company and its investors. One of the biggest strengths I see is their determination to fight for their Nasdaq listing. Requesting a hearing shows they're not giving up easily. However, their weakness lies in their financial performance, which is what led to these compliance issues in the first place. The outcome of the Nasdaq hearing is a major event to watch. If they can convince the panel that they have a solid plan to regain compliance, they might get a reprieve. But if they fail, delisting is a very real possibility. In conclusion, Dermata's situation is uncertain. They're facing significant challenges and their future depends on their ability to improve their financial performance and convince Nasdaq that they deserve to stay listed. It's a high stakes game and only time will tell if they can pull it off. Alright, that's our breakdown of Dermata Therapeutics' latest filing. What's your take on these events and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.